It's Q4 of 2024 and the election is done. So now the question is, what are you doing to prepare yourself for the next real estate market phase? Hey everyone, welcome back to the channel. I'm Fahad Siddiqi, and today we're diving into something every real estate investor needs to understand: market cycles. Let's start with the basics. A real estate market cycle is essentially the series of phases that property markets go through over time. There are generally four main stages: recovery, expansion, hypersupply, and recession. These cycles can be influenced by a variety of factors like interest rates, economic growth, and demographic trends. By identifying where we are in the cycle, investors can anticipate changes and adapt their strategies for maximum profit. Now, let's break down each phase so you know what exactly to look for. The first stage of the cycle is recovery. This is when the market is bouncing back from a downturn, like a recession. In this phase, vacancy rates are typically high, rents are low, and there's not much new construction happening. If you can spot the recovery phase early, this can be a great time to buy because property prices are still relatively low and there's potential for growth as the market strengthens. It's the classic buy low opportunity if you're able to identify it. Next up, we have expansion. During this phase, demand for real estate is growing. We start to see lower vacancy rates, rising rents, and more new construction. This is the phase where the market is hot and people are buying. As an investor, this is a great time to sell if you bought during the recovery phase, or to consider buying properties that can benefit from rising demand and appreciation. Timing your entry and exit during the expansion phase is key to maximizing your profit. After expansion, we enter the hypersupply phase. This is when supply starts to catch up or even exceed demand. Vacancy rates start to climb and rental growth slows down. You'll often see a lot of new buildings completed during this phase, which can lead to oversupply. It's in this phase that I want you guys to be cautious. If you own property, it might be a good time to sell before prices soften. And if you're looking to buy, wait for prices to adjust as you might get better deals in the coming phases. Finally, we have the recession phase. Here is where vacancy rates are high, rents are low and stagnant, and property values tend to decline. This is often when the market corrects itself after a period of overbuilding or decreased demand. For seasoned investors, a recession phase can actually be a golden opportunity. This is where you can find properties at lower prices, potentially laying the groundwork for strong returns when the cycle enters back into recovery again. Market cycles are an important part of the real estate game. They influence property values, rental demand, and overall investment opportunities. By understanding where we are in the cycle and adjusting your strategy, you can make smarter moves and build greater wealth over time. Thanks for watching, guys. If you found this video helpful, please give it a thumbs up, subscribe for more real estate insights, and leave a comment if you have any questions or thoughts on the market cycle. Also, I want to remind you guys, next week, Tuesday, November 19th, we are having a live webinar where I invite you guys to come learn about all the things that we're doing here at King's Private Equity Group, and where we're going to talk about maximizing profits with new development. So I look forward to seeing you guys there. Hit the link below to register, and until next time, keep building toward your financial goals.